On this shift, what are they saying downtown, Bob?
Oh, Brian, great to see you as always. It's time for ETF Edge. Now, you were talking about this right at the top with all the guys. Rotation the story. ETFs are benefiting from that. A lot of volume down here this week. Take a look at value outperforming growth. The largest value ETF. IVE is the symbol, up over 3% in the last week. Growth, you see, basically doing nothing. That's flat. Value sectors are typically right now retail, banks, energy, and industrials. They're also outperforming in the last week. No surprise there. So what's going on here? Nick Colas of DataTrek Research, Chris Hempstead, formerly head of ETF Sales at Deutsche Bank, now an ETF consultant. He joins me now to discuss. And Nick, this all corresponded with the bottom in yields. That was, what, Wednesday or Thursday last week? We've turned around. What's the story? Is it because of optimism on trade talks? Is it because we don't believe there's a recession in 2020? Why the bottom in the yields?
Yeah, so basically you can draw a line between that 90% chance everybody thought we were going to have a recession at the end of August to now maybe a 65% chance of getting a recession. That's really helped first European financials. They've rallied over 8% in the last week. That's also helped U.S. financials, and that helps value because that IVE that you showed is 22% financials.
Yeah.
So the rally in financials has driven the rally in value.
Yeah, and that KBE, that bank ETF, Chris has been doing really well in the last week. I guess the problem is, do we really want to own banks here, still in a very low rate environment, and even if there's no recession, slow growth economy? Are we all of a sudden supposed to buy bank stocks? I don't quite get that idea.
I think
I know they're cheap.
You need to take a step back for a second. This deviation from what the norm has been of growth over value is still very new. What we used to say on Wall Street, we still continue to say, is the trend is your friend. And I'm not sure a 2 or 3 day, gap of value over growth is necessarily going to be something you want to necessarily bet on just yet. I expect growth to continue to be, a safe place to put your money, and we'll see from there. So I also think that when you want to play the value growth, differential, you do have the iShares, you also have Russell value growth, and then you also have some really different issuers that offer different ways to gear it.
And I get the fact that retail, for example, another value sector, has been beaten up badly, but does that mean we necessarily need to buy it? Because Gap is a value stock these days. So XRT has been rallying as well. Same story with the banks, just like that. That doesn't necessarily mean they're necessarily going to be great buys in the next year just because they've been overbought and been heavily shorted. We've seen some short covering. That's what's going on in some of these, isn't it?
It absolutely is. Look, you've seen a pendulum swing back from this excessive pessimism at the end of August to something more realistic and logical now. Doesn't mean it has to continue. And let's not forget, you buy value at the bottom of the economic cycle. You buy value when things are horrible. Financials, auto companies, rails. You buy all those things at the bottom and wait for a rally.
All right, Chris and Nick, thanks much for joining me today.